Hello, I'm Tim Beggins, president of Elk Trading Company. In this, the top news for natural gas. Number one, the weather models continue to add HDDs, heating degree days, to the weather forecasts. Number two, the oil rig count continues to fall, which over the long term would be bullish for natural gas. Number three, the Ukraine peace talks are eroding the TTF or title transfer facility. That's the market for Europe, that war premium. And number four, US LNG feed gas demand is set to reach 20 BCF in the first quarter of 2026. May actually get there sooner. Let's turn to the spot January contract here on barchart.com. Currently, prices are trading at 482.80, down 2.2 cents, or a little bit less than 0.5%. And what's going on? We're jostling back and forth. Why? Because we're trading $5 in the cash market at the Henry Hub, but the weather forecast models are a little warmer at the back end. So we pushed out above 490. We got to 491.5 overnight, but now we're currently trading down just 2.6 cents. And as you can see, the RSI is turning to the negative side. And so we'll look to see if prices continue to erode toward 467.10. That's our exponential moving average, the 13-period exponential moving average, or whether or not we've got enough oomph in the weather forecast models to push out over this high here around 491.5. Let's turn to the hourly chart. This is the daily pivots. And as you can see, we're above the daily pivot, which comes in at 474.90. We're currently testing here at 497.20. So we got close at 491.5, but just lacking that oomph to get going. And as you can see on the hourly, the RSI has turned or is about to turn to the negative. As you can see, this is sort of a spinning top candlestick formation. So not exactly bullish right now at the moment, but cash is holding us up. So let's turn to the front to back spreads. This is the Jan 27 versus Jan 26. And as you can see, we're actually up a little bit today, up 1.6 cents to 17.5. That's still Jan 27 over. But this is what our technical pattern looks like. We take that measured move here. This is from October the 30th all the way down to November the 13th. And then we have this ledge. And this is what's called a two-wave corrective. So we measure that off the break from that ledge, which occurred on Friday, the 28th, and we measure it down. And that means that we're looking at minus 25 cents, meaning that Jan 26 will be over Jan 27. How is that going to occur? We need colder weather on the forecast, especially at the back end of the model, in order for this to happen. Otherwise, we're going to come back here and test that break of the ledge around 30 cents. That's positive to this Jan 27 contract. And let's turn to the LNG markets here. This is the JKM for January versus the TTF. That's the European marker. And as you can see, we're currently trading at 128.5. So we're pushing out to a new high. Why is this happening? The TTF is eroding faster than the JKM is eroding. So this is giving incentive for US spot cargoes to push back toward Asia rather than Europe. And let's turn to the 8 to 14-day temperature outlook. This is typical La Nina conditions. And as you can see, colder weather around the Great Lakes, New England, and the mid-Atlantic states. This is the triangle we always watch during winter. Chicago to New York, down to Atlanta. That's our best space heating demand for natural gas, the residential natural gas demand. And that looks like we're going to get some good weather at least through this week here through December the 7th. This is the extended range temperature anomalies. And as you can see, the upper Midwest all the way back to New England and all the way down to Texas is going to be colder than normal, but then it warms back up. What happens later? We get another wave. This is typical for this type of La Nina conditions, but as you can see, we warm back up here at the end of December. If this holds, that means the prices are going to fall lower. But let's look at Europe. It's warm all the way through the December 15th forecast. And as you can see right now, we're just really kind of normal. And this continues all the way through this week, into next week, and even into the third week. And again, as we get into December, into the 15th, it stays normal. And here's Japan, North Korea, or Korea, And of course, China, as you can see, this is Beijing, the capital city right here. And this is December the 2nd. That's tomorrow. And as you can see, some quite cold weather is coming through here. And this extends all the way back into the Koreas and over into Japan as we get a little bit later into the forecast through December the 4th, 5th, and so on. But then again, the same thing here as the United States. It warms and gets cold, warms and gets cold. Typical La Nina conditions. And here's what we're looking at for the 4th here in the United States. This is the pivotalweather.com. This is the GFS model here, or the Global Forecasting System model. And as you can see, cold around the Great Lakes, extending all the way back into Texas. And if we look further out, all the way down through the December the 17th, that's the warm temperatures that everybody's a little bit worried about. But as you can see, colder weather is starting to form back up in Canada again. We're going to continue to get these waves, one after another. And here's the ice up in the Arctic. As you can see, the Bering Straits, well, it somewhat closed and then opened back up again. This is pretty thin ice here, and we're really thin across the upper parts of Hudson Bay. Again, we need the northern approaches Hudson Bay to freeze over before the rest of that body of water will have ice on top of it, and that will allow cold Arctic air to go straight down into the Great Lakes, into New England, and the mid-Atlantic states. Long term, here's the problem, the drought. This continues because it's a La Nina year. And we've got extended drought across the southeast, Texas, of course, the desert southwest, and the upper parts of the the Great Lakes states, Indiana, Ohio, and Illinois. And let's look at the oil and gas E&P sector. These are stocks between $2 and $10 billion and have a high short float over 10%. And we've lost Apache here, APA. And right now you can see CRK has been the winner so far, up almost 10% for the 1 week performance. CNX, also a natural gas producer, up 5.77. And as you can see here, it's turning even more green as we go through the day. And we can see BKV, which is also a natural gas producer in the Barnett Shale around Fort Worth, also up 9%. So it's been a good week for the oil and gas E&P sector. So recapping here, right now we're currently trading at 479.30, down 5.7 cents. We're a little bit over 1%. This is for this January contract here on barchart.com. So let us know your thoughts in the comment section below. Please hit that like and subscribe button. Thanks for listening. We'll see you soon.